Hi everyone, this is Jason Burak of Wall Street for Main Street, and this is your video blog for Friday, October 1st, 2010. Today in the markets, gold and silver both continued to rise along with other commodity prices. Oil, in fact, even got above $80 a barrel, which is pretty surprising considering the supply and demand fundamentals for oil and how there's a short-term supply glut. But the dollar has been crashing on the dollar index, and the dollar is making a very good chance here at crashing through resistance there. So let's talk about gold and silver, and let's talk about some mining stocks, and that'll be it for today because I'm going to be celebrating my birthday tonight. I don't turn 28 officially until Monday, but I'm going to be celebrating it tonight. So let's talk about gold and silver. Silver now closed above $22 an ounce. If you look at a 30-year long-term chart for silver, you will see that it is an inverse head and shoulders, and it is officially breaking out. So in my last video blog or two, I asked if this was the move. If silver continues to move up here, and the great technical analysis of Mo Money, Dawood, and also of Jordan Trensman, Roy Byrne over at the Daily Gold and the Daily Commodities, and they think that silver will be around $25 an ounce by the end of this year. So based on that, I think this is the move for silver now. I think the odds are high of that. But you know, if we see a pullback, it'll be a good buying opportunity, folks, for physical silver and or silver mining stocks. I hope you bought. I hope you listened to some of my opinion, and I hope you went out there and did some of your research in the past and my other video blogs, and I hope you got some free leverage to higher gold and silver prices by buying some of those more quality gold and silver mining shares. And some of them are still trading at a good discount. There is still value there, folks. So we are not overbought from a value standpoint. Maybe from a RSI standpoint on the technicals, we are slightly overbought. But in that regard, things can go overbought for a long time. So back to the silver chart. A 30-year silver chart right now is in an inverse head and shoulders. If you looked at a more recent silver chart, it was in a cup with a handle, and it just broke out. So very, very bullish technical-wise for silver. The fundamentals for silver are great. I told you in my Daily Commodities podcast last week, I told you guys that the physical demand for silver out of China and also India and other areas in the East is just increasing ginormously, folks. So I think what's happened is I think that Andrew Maguire interview on the internet and the fact that Michael Maloney did a lot of speaking tours in the Far East there talking about gold and silver and how undervalued it still was, I think that's all come together at this amazing perfect storm moment. So I think the move is here, guys, but you know, don't put all your money into gold and silver, obviously. I mean, save a little bit of cash just in case there's a pullback. If you're looking to add to your position or open up a position, if you have not opened up a gold and silver position, you have not missed the move completely. Some of you think you have, but I think you're completely wrong. I think there's a long ways to go, and I think all these countries are debasing their currency. It's not just the U.S. It's Japan, it's Brazil, it's across the board, guys. And even China with the dollar peg here, they might be allowing, you know, slight appreciation of the RMB, but they still have to print money too, even if they're on a smaller dollar peg. So I think gold and silver here are definitely leading the way. If you looked at the soft commodities, though, they did a great job this last month, but silver is really doing well, guys, really doing well. I'm very impressed. This is the move I think we've been waiting for. And for the rest of the year, I want to be on record here. I expect silver to outperform gold percentage-wise. So I think gold, I was expecting it to be tougher for gold to get above 1,300, but it's looking like gold is going to be grinding upwards maybe to about the 1,330, 1,350 range probably by the end of this year, especially because the politicians are looking here in the United States to want to print more money, do another type of quantitative easing or stimulus or jobs bill. So that money printing has a direct effect on the stock market here. The stock market is a forward-looking indicator, and people can say, oh, all the speculators, that's the only reason gold and silver are being forced higher, and I beg to differ. I think a lot of the gold and silver being forced higher is the market is pricing in inflation expectations or currency devaluation. It's pretty much the same thing. So if you have not bought any physical metal or you've not bought any gold or silver mining stocks, or any of the royalty companies, which I really like a lot. I really like the gold and silver royalty companies, like Silver Wheaton and Royal Gold and Franco-Nevada and a couple smaller gold royalty companies. But I think you should seriously take a look here. I do not think you have missed the move, and I think the long-term trend is very much intact, and I think it's actually growing stronger. So everyone have a great weekend. I know I'm going to have a great weekend, and I'm out of here, guys. I hope you had a great trading week, and I hope your investing account's doing very well. Thanks, everyone.